We are very closely monitoring the situation with Air Canada, which says it will begin canceling flights ahead of a possible weekend strike, with more than 10,000 flight attendants set to walk off the job. Robert Kokonis is president of AirTrav and tracks the industry closely. Robert, do you think this is going to happen? Is there any possibility of a last-minute deal here?
I'm optimistic, John. There will be a last-minute deal because both parties understand the hurt that would happen across the economy to the company. And at a time when we're seeing big declines in transborder travel, domestic's been flat. So I think both parties understand the stakes at place with winding down an airline that serves 40% of the domestic market and big chunks of the international marketplace. So I am cautiously optimistic. I would put the odds of a deal, if I were a betting man, at 60% in favor.
Okay, and what would get the deal done? Is it at the end of the day the wages story, which is sort of getting a lot of attention right now? What can you tell us about wages for flight attendants in the industry and at Air Canada?
Yeah, I mean, right now the hourly pay is about $63 for somebody with 10 years of service, just like the pilots. The first couple of years of service, the pay isn't great, but they rapidly grow. So, for example, somebody that was hired in 2015 as a flight attendant, their pay would be actually up 150% as of year 2025. But of course, the lower end is not great. Word did leak out earlier this week of a 32 or 33% pay boost. I think that would make Air Canada flight attendants the highest paid in Canada. I think that is less contentious than the lingering issue of unpaid time.
And I mean, in terms of the business of Air Canada, what do you think is the consideration for them in all of this?
Well, we saw, if you go back to the second quarter released a couple of weeks ago, their adjusted cost per available seat mile, a gold standard industry wide, was up 6%. So we take fuel out of the equation and a few other things. And the biggest growth item for the quarter was labor. So you're starting to see the impacts of the pilot deal ripple through that. And then, of course, any increase for the flight attendants. And don't forget, because Air Canada is unionized from top to bottom, except for management, you get this pattern of negotiation settlements where one union settles and then the next one's up. So I think the labor costs pressure, when we have headwinds on the revenue on the top line with tariff battles, with big slowdown in U.S. travel, those are the concerns the company would have. So I think, again, 33% not to negotiate on behalf of anybody strikes me as a very fair deal, and I certainly do see the two sides settling.
Okay, thanks for setting up the two sides. You did allude to kind of, the economic uncertainty caused by a worst case scenario. Just remind us about, what that might look like if we've got a standstill here with Air Canada.
So Air Canada, AirTrav, my company's a senior air transport economist, has pegged the hurt Canada-wide GDP, direct and indirect, so induced impacts, at around $90 million a day. So if the flight attendants were to go up for, let's say, 2 weeks, we're talking about $1.5 billion hit to the Canadian economy at a time this economy can ill afford that kind of hit. So I think there's going to be a lot of pressure, including from the government, but I want to make it clear that I want both parties to reach a deal outside of government intervention. That's got to be the absolute last case, that collective bargaining between the parties has got to be allowed to play out right up until the very end.
What's the ramifications of the government getting involved, in your opinion?
Well, of course, it undermines the legitimacy of organized labor in the country. And I do believe, if you remember the pilots last year, that the government was prepared potentially to let the pilots go on strike. So would this happen here? Maybe as well, too. But we just had a Competition Bureau report that was released back in June, talking about the dominance of Air Canada and WestJet collectively. It's a big chunk of our air transport network. I kind of argue a little bit sideways in that the growth of Porter and Transat and Flair, we do have other options, but it is a fact that Air Canada plus WestJet are big chunks. So it would be a real challenge if Air Canada were to go. And it's not just, the leisure and the holiday season, it's visiting friends and relatives, it's movement of cargo, there's movement of medical goods. There's a lot of things at stake if the cabin crew to go out. That said, I understand the position they're coming from. The current formula in the recent or the collective agreement that has expired does actually have a formula to address the key issue that the flight attendants are concerned about, which is unpaid time on the ground before the flight departs. But the company has recognized, I believe, that formula does need to be adjusted. United Airlines and Porter recently adjusted their formula. Transat tried to get their union to do that, didn't work out. So I think there needs to be work to ensure that whatever the compensation is in that formula has got to be tweaked to be effective. That, I think, is where that's where the work is going to be put in the next couple of days.
Okay, Robert, thanks very much. We'll watch closely. Robert Kokonis of AirTrav joining us.